Hello and welcome to Moneylife News and Views. I'm Debashis Basu. Now, with the Indian economy, if you're too pessimistic, you're going to miss out an opportunity. We saw this in 2022, from the middle of 2022 until very recently, when growth has been extraordinary and across the board, which is why all kinds of stocks have shot up altogether. Now, if at that stage you start to extrapolate, thinking that this is going to last forever, and you start believing in all the bullish new claims, the government policies, the ministerial claims, and other selective positive anecdotes, all amplified these days by social media, you will then probably be frustrated, because in the absence of structural changes, the pendulum of growth that you just saw will start to swing back to normal and possibly over to the other side. We have seen this again and again and again in the last 25 years. And this is what is perhaps happening now once again, which frustrates die-hard optimists. We saw a glimpse of this in Washington last month when the Union Finance Minister, Mrs. Nirmala Sitharaman, railed where economic activities are good and robust and dynamic, money flows. That's the normal textbook assumption. I want to ask, where are the investable funds? Where are the investors? What are they looking at? What's holding them back from investing in India? Well, that's a pretty frustrated set of questions from the minister. Now, the plain answer is the same factors that have held them back for the last 20 years or 25 years. The only exception during that period was the infrastructure and real estate boom between 2006 and 2012. Now, that was a very undesirable kind of boom because it was riddled with corruption and crony capitalism. We don't want that. We want normal, healthy growth of a very robust kind for a very long period of time, but that's not happening. That has never happened. India's economy has long been characterized by modest growth cycles, rarely experiencing recession, but also failing to achieve sustainable acceleration, like what you saw possibly many decades ago in Japan, Taiwan, and Korea. Now, these short economic cycles are driven by clearly identifiable macroeconomic factors, such as domestic inflation, interest rates, poor growth in manufacturing and agriculture, and the health of the US and the European economies, which influence India's exports. So these are the factors, and most of them are usually adverse. Most importantly, irrespective of household income levels or corporate earnings, growth in government revenues is always in double digits. So the government is constantly extracting money from the system. Why? Because such high extraction is needed to pay for government salaries, which are very high, national security, both defense and internal security, and interest on government debt. So there is very little left over for investment in the state investment, that is in education, healthcare, and urban transportation for the poor people or the average or the middle class people. Worse, a lot of what is spent is often wasteful due to very high corruption at the state and local levels. And this is the picture. This is the overarching macroeconomic picture of India. Now, this could not have delivered even the kind of growth we are seeing. We just take a 6.57%, 8% growth for granted. But remember, forget about 6 to 7% growth. The economy would have done very badly, but for two bright spots. One, which is net services exports, which is about $161 billion last year. And two, the deluge of foreign remittances from non-resident Indians, which was about $125 billion last year. Without these two contributions, the rupee would have been much weaker and inflation and interest rates much higher, leading to very poor economic growth rates, the kind that we saw in the 70s. Now, collectively, these macro factors create the big picture that has remained largely unchanged. So all others which I have described which is interest rates, inflation, weak rupee, remittances, weak exports, weak manufacturing growth, and poor agricultural growth, all of that put together, and massive remittances from NRIs, all this pluses and minuses all put together is the picture that has remained unchanged over years and years and years. Now, this yields both positive and negative outcomes. Now, what are the positive outcomes of this? If these factors remain stable, steady growth that is far higher than many other economies can be assumed, which guarantees higher prosperity for the upper middle class and the rich who corner the bulk of the benefits of such growth. Another positive is that the private sector is at the vanguard of this growth. So regardless of which political party is in power, there has been no foolhardy expansion of the public sector. The impression that only 2 or 3 large business houses are cornering all business opportunities, as some intellectuals tend to believe, that's not entirely correct. The big story, in fact, of India's economy over the past 3 decades is the extraordinary flowering of entrepreneurship across consumer technology, engineering, pharmaceuticals, energy, even finance to some extent. So take, for instance, mutual funds or stockbroking. Now, this is partly due to minimal new interference by the state. State is highly interfering in India. I'm not saying that the state interference is low at all, but it's not that it's constantly making life difficult to the extent that companies cannot function, what we saw in the 60s and 70s. Now imagine what more could have been achieved with improved agricultural productivity and reduced manufacturing, logistics, and power costs, and also upgraded labor skills, especially in backward areas. All this is the upside, which is entrepreneurship, which is growth, and of course, the money that the upper middle class and the rich are making, which is leading to consumption of expensive durables. What is the downside of this very moderate growth story? The downside is that Indian poor are coming out of the poverty in a very slow manner. So this will not lead to radical transformation, if this kind of configuration, and only incremental growth. So don't expect a deluge of foreign direct investment or surging domestic capital expenditure, the kind that the finance minister seems to be expecting as a matter of right, because all the growth and all the textbook situation that has been created. Growth would only trickle down, keeping the teeming masses hopeful of a better future, but will not be adequate to improve their savings or consumption. Remember, what we are witnessing is something quite significant, which is huge stress which is built up in unsecured lending, including microfinance, despite the much vaunted 7% GDP growth. And this means that a lot of people, especially people who do not have, who are not our middle class, let's say middle class and the poor, are not able to make their both ends meet, which is why the consumption is low, which is why the borrowing is high, and which is why they are unable to now repay their borrowings. This is the downside of very slow and very uneven growth that we have and that we are likely to have, because there's nothing we're doing about it. So the income levels, as a matter of fact, the majority have not increased commensurately with growth, and so consumption is being funded by debt. And clearly, there's a big disparity between headline growth figures that delude us and the actual quality of that growth. Now, when the economy was in serious trouble due to the double blow of demonetization in goods and services taxes, I'm talking about 2015, 16, 17, 18, the government's knee-jerk response was a drastic cut in corporate tax from 30% to 22% in October 2019. Tax rates were set at an even lower level, which is at 15% for new businesses. But despite this, the government tax reduction, that with the government expecting that now that the private sector has got a lot more money out of the tax savings, they will invest. But private capital investment still remained weak. 3 years later, in the post-COVID period, the government then stepped in. It announced a huge capital expenditure of 10 lakh crore in the budget of 23-24, which then was raised to 11 lakh crore the next year and had been kept at the same level as the following year. The central government's capital expenditure as a percentage of total expenditure hit an extraordinary 28% in FY24 from just 14% in FY14. So the idea is that the private sector can't invest, the government will invest, and that would trigger more investment from the private sector. But this failed to incentivize the private sector to ramp up investment significantly, and certainly that includes the foreigners. That's foreign direct investment, which is just not growing, which is why the minister seemed a little concerned in Washington last month. Why are you not investing? The fact is, right now, both private consumption and capital expenditure are already weak and declining despite strong balance sheets. If the government really wants to know why private sector is not investing, why FDI is not increasing in India, well, it will have to get the industry to talk frankly and then implemented many of the ideas that they offer. And some of these ideas would be rather radical, which the government may or may not be in a position to implement. So it seems hardly probable that, the next steps would be taken, which is the first step being, why are you not investing? Come and tell us what to do. And then we do all those things. That does not seem probable. More likely, the Indian economy will continue in its natural course of modest growth, with the rich getting richer, poor getting poorer, and of course, we continue to muddle along at 6 to 7% growth unless there's a big blow, domestic or international. So what has happened, the more of that will happen. And if there is an extraordinary growth, please remember that that is going to be corrected to the other side. So it seems hardly likely that we are going to break out into a super growth period of the kind that a lot of people tend to believe is our birthright. If you liked what you watched, please do share and please do subscribe to the channel. Thanks for watching.